No one ever likes it when prices of basic goods suddenly go up. I know I don't. What about you? Most of the time, inflation is just out of our control. It is simply the effect of years of financial decisions and economic changes. When the Federal Reserve decreased interest rates in 2021, everyone knew that inflation was on the way. But the Fed stated that we shouldn't be concerned because inflation is just a little above 4%. However, if you look at the current situation, prices have risen significantly. By consumer pricing, I don't merely mean the value of financial assets like real estate, stocks, etc. People were returning to work after the pandemic has pushed inflation in the United States to its highest rate since 2008, increasing prices. Yes, inflation may not be a good thing, but there are actually many ways where you can profit from it. Sounds unreal? Just see at the end of this video. Hey folks, welcome back to Capital Finance. Now, let's start with the first smart investment you can make with inflation. Number 1. Invest in stocks. Compared to crypto, which has gained thousands of %, stock values are more steady and less dangerous. The S&P 500 gained 40% between July 2020 and July 2021. Given that you're investing in the whole U.S. economy, it's an incredible return. Buying a share in a company is like owning a piece of that company. As a result, they're also known as shares. When the economy is overflowing with cash, the value of a company rises, allowing you to keep pace with inflation. That money is frequently spent on necessities and wants, which means that businesses develop quicker. So, you aren't just combating inflation, but you're gaining from it. Allow yourself to consider how much of those stimulus checks were spent on Amazon or Apple items. Consider that these firms have taken out billions of dollars in loans for free. Most have grown at an exponential rate in addition to all of that borrowing and growth. There has been an increase in expenditure and employment since the economy has regained its footing. As a result, the development of these enterprises is expected to continue at a rapid pace. Keep your money in inflation-protected investments at all times. Well-off people tend to carry about a lot of cash. Emergency funds are usually kept in the form of a small portion of their net worth. Take the wealthiest individuals in the world. They are so rich because they own a significant portion of their founded companies. In time, their wealth grows as well. Inflation can still benefit you even if you just have a few $1,000s to invest. Number 2. Hold on to your real assets. It's common knowledge that currency prices are controlled by supply and demand and various other variables. Yet, most people don't realize this. You have $10 in the entire economy and 10 houses on the opposite side in a hypothetical scenario. $1 is all that is needed to buy a property in this hypothetical scenario. It is possible that if we invest an additional $10 into this market, the price of a single home in the $2 range will rise to at least $20. A straightforward approach to comprehending inflation is by looking at this. When the economy was on the verge of collapse last year, the Fed decided to pour billions of dollars into the economy to avert a depression by issuing stimulus checks and purchasing corporate bonds. Currently, 22% of the US dollars in circulation are those that were produced in 2020. An economics degree isn't required to see that inflation is imminent. That's why, when interest rates were at their lowest, everybody who could afford a home made an instant investment in real estate instead of storing cash. It doesn't matter if the real inflation rate is 3.4% or 4.4%. This is due to a rise in at least 15% housing prices and maybe up to 20%. Rather than merely beating inflation, real estate investors made a fortune. If you're looking for a decent deal, it's best to take advantage of the low interest rates and get a mortgage instead of merely buying a property. Number 3. Buy gold. Historically, gold has served as a wealth preserver, especially during times of crisis. Here's how it works. Gold prices rise when the future is uncertain. Because of the financial crisis of 2008, gold prices soared from roughly $600 in 2007 to over $1,000. People started buying gold as soon as they realized what was going on. On the other hand, gold will never lose its value or become completely worthless, even if the US dollar does. Even though the US dollar has lost more than 90% of its value in the previous century, gold has remained stable. Investors once more became alarmed in 2010, and they ramped up their gold purchases to a record high of $1,900 per ounce. However, the economy has steadied, and the gold bubble has deflated since then. When the economy appears to be on the upswing, investors tend to avoid gold and instead put their money into stocks and other assets. Gold prices generally decline in predictable and consistent periods because of this. Gold prices started climbing again in 2019 when the United States initiated a trade battle with China, and the pandemic made it much worse. Until now, gold has never been more than $1,200. Gold has always been an excellent tool to protect against inflation, as history shows. Even while a dollar in 1973 was a considerable sum, it now only buys you a few chocolates. Gold prices have climbed from roughly $100 in 1973 to over $800 today. As a result, gold is not something I'm very enthusiastic about. It does nothing except shine while stocks or real estate generate money for the most part. Essentially, it is a service or product offered as an active asset. Why do stocks continue to rise? Because the firms who own them are expanding at a rapid pace. In the last decade, Apple has sold more iPhones than it did then. As a result, its value has increased significantly during the past decade. Number 4. Utilize debt. You may think that debt is terrible, but it may really be beneficial, especially when inflation is high. If a dollar now is worth more than a dollar tomorrow, this is called inflation. I can make money now if I borrow a dollar, return it tomorrow, and then pay it back. There was a time when the cost of a home was less than half of what it is today, roughly $150,000. A home worth $150,000 20 years ago is now worth $350,000, thanks to the declining actual value of the dollar. We all know who started borrowing all that money when the Fed dropped interest rates and started buying corporate bonds. Companies like Amazon, Facebook, Microsoft, and Apple, who are among the largest in the world, are raking it in, even though they don't actually require it. Apple has almost $200 billion in cash on the side. However, it had to take out a loan because investing in the S&P 500 yields a minimum of a 10% return while only requiring a 1% interest rate on the money borrowed. You may still earn a 4% profit by investing the borrowed money, even if the interest rate is just 5%. Additionally, if you borrow funds, you may take advantage of these tax advantages. Consequently, you'll save money on taxes. Borrowing money when interest rates are below the rate of inflation is potentially profitable. Number 5. Invest in cryptocurrency. Because many individuals have gained from inflation by purchasing cryptocurrency, I felt compelled to discuss it, although it is highly hazardous. Even though the technology underlying it is undeniably brilliant and has enormous promise, it is highly dangerous and uncertain in the near term. One of the reasons Bitcoin has risen so much in the last year is because the Federal Reserve has started producing trillions of dollars. In the wake of investing in real estate and equities, investors also decided to engage in Bitcoin. People who were not involved in Bitcoin before the pandemic may not recall that the price of a Bitcoin was slightly over $8,000. At the start of the trade war, the price of Bitcoin was a little over $3,600. You might have made a fortune if you were interested in Bitcoin when most people weren't. However, most people become enthused about something when it's in the news all the time. A few jumped in before the masses, and their fortune has risen by 10 to 20 times since then. That would be the last on our list. I hope this video has helped you understand how inflation works and how you can benefit from it. As always, thank you for watching. Don't forget to like and subscribe for more content like this one. See you in the next video.